welcome on stage our moderator and panelists for our next discussion. We've been deep diving a lot into the different components of funding in the startup and tech ecosystem here. We're looking at availability here in the region. We're looking at biases among different classes of investors in the region. We're looking at intelligent funding. We're looking at funding that considers the role of impact, the role of ESG. Today's discussion this afternoon in this panel is about the so-called funding winter. Does it actually exist? Why does it? And what does it mean when it comes to funding right from the seed stage all the way up to Series C? To lead this discussion, our moderator is an old friend and someone whose work I greatly respect. Abby Sam Thomas is the editor-in-chief for Entrepreneur Magazine in the Middle East. His panelists are Ramez Al-Sarafi, the CEO of Flat6 Labs, one of MENA's leading seed and early stage VC firms, delivering one of the most renowned startup programs in the region. They've been going from strength to strength and growing all across MENA. We also have Ayman Al-Ashkar, a real estate economist and AI strategist, and the founder and CEO of Overwrite.ai, which is an AI writing assistant for real estate agents. And last but by no means the least, also an old friend, Medea Nocentini, who's the senior partner and chief operating officer of Global Ventures, an international venture capital firm investing in innovative startups with the potential to transform emerging markets and scale globally. Medea is a huge champion for social enterprise in the region. I first met her almost 9 years ago. She's still a part of C3, which is companies creating change, and they've been doing some amazing work in terms of bolstering the social enterprise ecosystem here. Without much further ado, a round of applause, please, for Abby, Ayman, and Medea and Ramez.
Thank you so much, Natasha. As always, a pleasure meeting you and having you lead this discussion. A round of applause for Natasha, by the way. She's been here since the morning, so please, a round of applause for her. All right, ladies and gentlemen, we are here, as Natasha has already mentioned, we are going to be discussing the apparent or the so-called funding winter. And I do appreciate the quotes, the air quotes that Natasha did put in. Because there is that question, like we've been hearing it from Y Combinator, we heard it from Sequoia, that there is a funding winter coming, it's going to hit us, and we need to be ready for it. Having said that, the question now becomes, are we going to see it here in the MENA region? Because so far, we have not yet seen it, or maybe we have, and that's the question I'm going to pose to our panel of investors and entrepreneurs, of course. Ramez, first question to you. Is there a funding winter in the MENA region? Should we be expecting it? What is it going to look like?
Hello, everybody. Good afternoon. Thanks so much for having me. Yeah, I'm not sure if you can sit here and deny that there might be a funding winter or that things aren't going as expected maybe last year. But I guess it's so many factors put together, right? So we as investors, I think we have to look at the model of how venture capital actually works itself. So most of the fund managers, or the GPs as we call them, they go to limited partners or financial institutions, there is capital from them, and then invest this capital in startups in exchange for a management fee and the carry and all of that. And usually the way these funds work, that they work in time intervals. So you raise a fund, you manage it for 5 years, say, and then you realize your returns within the following 5 years. So most of the existing funds in the region or anywhere in the world, they had secured a chunk of funding to be able to invest in the following years. A lot of the people made use of the downtime during COVID, and there's the tech boom and everybody was looking at technology, that they managed to secure and raise new funds, and a lot of funds got announced within the last 2 to 3 years. And I'm expecting that a lot of this money will be deployed in the market for the next couple to 3 years to come. So that's the current situation, right? From a fund manager perspective, that there should be money to invest in startups. However, if you know that there's a winter coming and that a lot of startups are struggling, the failure rate, for example, might be higher than the average, then you'll be a little bit more conservative than the usual, right? And I'm based in Egypt, and I think over the last 2 years we have seen a huge shift in terms of valuations in the market. I'm sure Madia can talk about that as well. Not only in Egypt, I guess in Saudi and here, like in terms of the hyper growth and the number of startups that raised substantial amounts of money. I'm not sure if we'll be seeing this going forward, like especially for the next year. I think there might be a correction in the market, but still, like I think it has happened. It's not really going backwards. It might slow down. I think everybody is looking now at different priorities in terms of how you are deploying your capital as an investor and how you're deploying or spending your money as a startup as well. So I think there might be some shift in priorities going forward, if I'd say.
Maria, same question really, but when it comes to deploying funds for for entrepreneurs, for startups, has there been a change personally for you at Global Ventures, and what are you seeing from your counterparts as well?
At Global Ventures, we just closed Fund 2 and we are starting fundraising for Fund 3. The outlook, it's not more challenging than usual. I just want to share a few stats, guys. In 2021, which is the bonanza year globally and for the region invested around $6 billion, which is probably the equivalent of one deal Series C in Silicon Valley. So we are starting anyway. Even if there are a few bumps along the way, I wouldn't call it winter, just because we are at the very beginning of the journey as an ecosystem, as a VC sector. So we are very positive. At the same time, all of us in the space, we have looked at our portfolio very carefully. We have planned for the worst, because we don't want to be disillusional or unrealistic investors. We want to make sure that we plan for the worst. We have asked all our funders to be more conservative in their expansion plans, to cut cash burn, to make sure they have enough runway. The situation is pretty positive, but at the same time, we all know what's happening at a global level, and here there is always a little bit of a 6 to 12 months delay. So very positive as always. Otherwise, we'll not be here. But with cautious. And I just met Philip, the founder of Magnet, 5 minutes ago, and he gave me some trends which are definitely telling us the winter is already here, because it's the third quarter that the funding amount decreases, is the worst Q3 since 2020. So I wouldn't expect something so much worse than what we're living these days. But again, it's funding startups. It's a 10-year game at least, because every fund typically has that kind of time frame. So what's a few quarters of winter in the long run, right?
I think this kind of ties into what Ayman was telling me a little while before. He was like, after the summer comes the winter. That's to be expected. So, Ayman, question for you really. As an entrepreneur, as the founder and CEO of Override.ai, it's an AI-based platform that is focused on the real estate market. I'm curious to hear from your standpoint, how are you navigating these kind of announcements being made about the funding winter? Does it affect you and how you do business on a day-to-day basis?
Fantastic question. My answer is going to be a little bit unconventional. Thanks for the intro, by the way. I'm ignoring it. Pure and simple, that's the only way. Because we set out to build a business that's sustainable during bear and bull markets, we can, and it's healthier to be able to just shut out the noise and focus on business building. Now, that doesn't ignore the fact that we need funding, and if there's a funding winter out there, that's fine. But ultimately, if you are able to see it coming, which we've been fortunate enough to do, then you can pivot accordingly and find alternative sources of capital. And this is what I was saying to the rest of the panel earlier, is that they're out there. The very people that are investing in the VCs, or not, are happy to deploy directly because essentially it's cheaper for them to do so. And enables them to get that alpha return whilst cutting out the middleman. I also believe that if your business is doing something right, then your own customers will invest back into it and help you fund. And that's for us, been the main pathway. Now, in addition to that, let me say that any founder needs to leverage every single skill that they have. And as a 20-year veteran of Dubai, I'm fortunate in that my career history, my background, and the time spent here means that I have a very wide network. Personally, I have a very wide network of people who I can call upon to invest in the business when funding is required, bear or bull market. Because again, the business is being built in a sustainable way, and so it's, you know, every founder has their own story, has to leverage their own unique particular assets, and ultimately, if what they're doing is sound, there are paths to capital that lie beyond the mainstream.
I mean, I'm going to take that one point and kind of run with it right now, which is that, you know, entrepreneurs who are seeking funds at this point in time, coming to you guys as investors, as people, I mean, even with the running as an accelerator program, what are you looking for from the entrepreneurs who you are trying to support, either through investment or either through accelerator programs? What are you looking for? What do you want entrepreneurs to be doing in anticipation of this funding winter, which is supposed to be coming?
I'll start. First of all, each of us has a specific investment thesis, and these might change from fund to fund. So make sure when you come and pitch to any of us that you know what we're looking for. Again, depending on the fund, it might be a slightly different sector focus. For sure, each of us has a focus in terms of stage. A global venture, our sweet spot is Series A, for example. We are focusing on Middle East and Africa, Pakistan and Turkey more recently, so anything that is out there. So do your homework and make sure that what you're pitching is relevant for the investment thesis that we have, let me say, sold to our own investors. So we have a specific mandate. The second, of course, and in particular in this moment in time, but I would say for global ventures it's always been the case, we're looking for thick value. We're looking for real business models that can grow sustainably. Unit economics are important. So make sure that the basis of your business is solid. And then it's a marriage, again, at least a 10-year marriage, which means there needs to be chemistry. We need to believe that at Global Ventures we can add value to your company. Sometimes, and we screen thousands of companies. We have screened 6,000 in the past 4 years. We have invested in 56. So you can see how difficult it is for us even to choose sometimes. Sometimes we choose based on how much value we can actually bring to you. So when you get a no from an investor, never take it as a judgment on the soundness of your business or your story, your journey. Sometimes it's just, there needs to be a match. We need to believe that in a 10-year span, maybe a 2 or 3 year span, we can add value and we can make returns and we can make your life super successful. Your success is our success.
Yeah, I think that's a good way of putting it. A no doesn't necessarily mean like a complete no. It can be just not now, maybe later. Same question, Ramez. A question for you, because I'm sure you've been in the ecosystem long enough, so you've seen these things come and go.
Actually, today is our 11th anniversary for Flat 6 Labs, so we have been in the market for 11 years. It's a long amount of time. It's very interesting for us because actually we started in the middle of the Egyptian revolution, right, in Egypt. So have seen, I guess, the worst of it on day one, right? It was a very tough market. It's not just starting in a difficult time. The main components that you need in the ecosystem to be able to be a seed investor, and then there comes an angel investor after this, or a later stage investor. A lot of these ingredients that we really need in the ecosystem that really didn't exist back then. Today, it's a totally different story. But we have been through this. We have been through developing an entire ecosystem, and this is basically what we also have managed to do or worked with a lot of partners across different locations where we're operating today to do. And I guess at times like these, we keep looking at the fundamentals. As a business, you need to have a proper team in place. You need to be having a real solution for a real problem. You need to understand your market very well. You need to focus a lot on actually solving the real issue and actually creating and building value that people really want and want to pay something to actually receive this product or service. So sometimes we just overlook these fundamentals for like growth or for like, you know, quick wins or things like that. And I think a lot of these were cases that happened over the last couple of years. Maybe a lot of people actually invested in startups during COVID without even meeting the founders or knowing the founders or seeing the team or knowing exactly what they're doing. I think they're just optimizing for the future or for growth. Going back to reality today, I think a lot of people will focus much more on fundamentals, as we usually do. We invest in like 60 to 70 new startups every year. We do a lot of follow-on funding. And we always look for these fundamentals when investing, especially at early stage. It's very, very difficult to optimize for growth or actually look or expect growth, for example, when you are just investing in a team. So going back to these fundamentals, I think are very, very important.
I think we've heard from the investor standpoint. I kind of want to hear from the entrepreneur standpoint as well, Ayman. The region doesn't have. I mean, it has definitely grown in terms of the number of VC players we have, the number of investors we have. But if you go back to the bare fundamentals, there still seems trouble for entrepreneurs to reach to investors and get their companies verified or even like supported by the companies. What's your advice for entrepreneurs at this point in time when it comes to raising funds, when it comes to raising money? What are some tips and tricks you can give them?
My advice for entrepreneurs when it comes to raising funds. Firstly, I'm no expert, right? And I've heard a million no's, and a lot of them, like Nevaeh said, are no for nows. So, in as much as I can impart advice, again, leverage your unique particular assets on the assumption that the business you're building is sound. Like Ramez said, you're solving an actual problem. Assuming all of that is settled, just leverage your unique particular assets, whether it's your personal attributes, your personal network, those of you, your co-founders, whether it's family or friends, whether it's anything you've got. You have to bring your A game to this business as a founder. You have to be the best version of yourself that you've ever been before. Every mistake you've made has to manifest itself in a correction, in an improvement, in being better. And so, assuming that, again, the basics are in place, and that you're able to then build on them by being that best version of yourself, then you'll find investors who will agree to jump into bed with you and get into that 10-year marriage, wherever they may be, whatever they may call themselves, angels, VC funds, private family offices, you name it. They're out there.
Let's talk about the sectors then that are now promising or that you guys are keeping an eye on at this point in time. We had been talking about sustainable businesses, but sustainable can also mean like impact focus. Do these ventures have a chance in this landscape? I'm curious to hear from your point of view, actually, given your role at C3. There you go.
When I founded C3 10 years ago, almost, so we were together, we were already in the ecosystem. There was still very clearly the two-pocket mentality where, there was charity on one side and then business on the other side. Finally, I will hope, and I noticed that already in the market, there is a convergence. So people look at impact measurement, look at, okay, what is the change that those companies are creating in the community. But it's not anymore this kind of, okay, either you have impact or you make money. We have now so many success stories where there is no difference between an intentional about impact founder making, a very successful or making their investors very happy, and somebody starting with the idea of not having an impact at all and then figuring out that actually they do. So I would say there is no clear definition anymore that I would like to refer to. What we're seeing is that a lot of the sectors that are getting disrupted, and again, financial inclusion was at the very beginning of the disruption around 2018. We have a lot of fintech startups in Fund 1. We went a little bit earlier. It's great to see what's happening now with those companies. Fund 2, because it was early COVID times, we saw a lot of pipeline in digital health. It made a lot of sense. We have a good slate there. So let me say, and now we're seeing a lot of potential for disruption in sectors like supply chain, in sectors like energy, and again, all sorts of energy, and if you wish, manufacturing or localization of manufacturing. So it's always a top-down look at the industries and see which ones are ripe for disruption, and then a bottom-up analysis of where the pipeline is. Having an industry ripe for disruption, but then not having you guys innovating in that space, it doesn't really help, right? So it needs to be a two-way equation. So it depends. It depends on the timing, it depends on the region, but I will say that's what we have seen in the past 3 to 4 years, and that's what excites us in the next few years.
Ramesh, same question, because I know Flat Six Lab has been venturing into kind of like, not new, but fairly new for the region at least. I know you ran the Femtech Accelerator program a little while ago. So yeah, curious to see like what are the kind of sectors that you're keeping an eye on and like what's next?
So we have always been sector agnostic when it comes to our investments, so we don't really have one specific sector that we'd focus on. We have invested in fintech, e-commerce, health tech, edtech, all these sectors, and we continue to do so. The majority of our portfolio are actually within these sectors. I know that there's a lot of focus on maybe hyper-growth sectors like marketplaces or food and beverages or fintech, for example. But we also like slow-growth sectors like edtech and health, because actually these are the long-term ones. We have been seeing a lot of activity going on in the agri-tech sector specifically. We have been running a few programs around this concept in Egypt and Tunisia. Specifically in Africa, actually, there's a lot of opportunities there when it comes to agri-tech, and we'll continue to support more startups within space, and we hope to see more. I think also depends on the location. So for example, here in the Gulf or the UAE and Saudi, we see a lot of marketplaces and e-commerce and fintech startups, unlike, for example, in Egypt, because like you have the bigger market. Also, fintech is a dominant one, but also these other sectors need a lot of disruption. We're also very excited about the Africa market, and this is where our focus will be next. So we're actually expanding into new markets over the next few years, specifically in Africa, in North Africa, but also in the East and West. So when it comes to these countries, green tech and agri-tech, edtech, and fintech will continue to be dominant for sure for many years in financial inclusion. One specific sector that we see a lot of momentum happening in now is climate change or climate tech, and startups addressing climate change challenges in general, specifically with COP27 happening in Egypt this year and here in the UAE next year. So I'm sure the region will be putting a lot of focus on this, which is great for the startups, for the larger good of the planet and the ecosystem, and definitely there is real commercial opportunity in this space as well. So yeah, these, I guess, will be the main sectors where we'll be focusing on.
Thanks, Ramesh. I think I'm running out of time, but I'm going to ask everyone to, think up questions. I'm going to open up for questions in like 5 minutes. But Ayman, kind of want to go to you for the last question, so to speak. And I know we are talking about the funding winter, and there are going to be times when entrepreneurs and startups simply won't be able to raise money in the next couple of months. And again, given your experience in business, given your experience in this particular ecosystem, are there any specific pointers you would give entrepreneurs at this point in time? What should they be focusing on? What should they stay away from? And maybe some internal things they can do to keep the business running.
Stay away from rabbit holes. Hard to spot, tons of them out there, very, very dangerous. Avoid them. You got to get good at doing that as well. And if you do find yourself in one, get the hell out quick. Can I ask you to give me examples? Bad advice isn't a good example. Avoid it in as much as possible.
Avoid bad.
Like the plague. Now I've gone through new, and my team knows this. We've been through rabbit holes over the journey, and there's no fun. If it is not directly contributing to the pure play vision that you have for your business, if your business isn't really consumer focused, whoever your customer is, if it's not consumer focused, if it's not delivering the solution to a valid problem in as efficient a manner as possible, then pivot in order for it to do so. Make sure that is what you're doing. I think that answers it. Where to get capital from at a time when there's no capital? I don't believe that there's no capital effort. There's any number. People invest in things, whether they are institutional investors, individual investors. They invest for a number of reasons. They might have theses and mandates that they have to invest for. There might be. You can go out there and there's a World Bank funded investment platform that's purporting to spray money out there. Go talk to them. You can. I believe that, again, I'm going to go back to this. I'm a purist. I believe that if you're doing something right, if you're doing what you're supposed to be doing, you're doing it right, your own customers will be happy to invest in it, whether they are the individual stakeholders in the entities are your customers, or whether your customers are individuals in their own right. Go to them, talk to them. Because people invest for any number of reasons. And just like the VCs who tell you that it's no for now rather than no, that implying that, it's in the timing, maybe the individuals or the angels, whatever you call them, customers, for them the timing might be right. It's happened for us on numerous occasions where the timing's been right, and we've had angels invest with us who 6 months prior wouldn't have been able to, 6 months after wouldn't have wanted to, whatever. So there is capital out there. I don't believe that a funding winter is apocalyptic, like the end of days type of thing.
It's definitely not the end of days, I hope. Questions? Can I see a raise of hands? Yeah. If you can just introduce yourself and ask.
Hello, my name is Zebo and I am from Tajikistan. So my question is about solving the problems, because you said that basically every business has to solve one problem, right? So there are many problems that I think customers are facing, but do you think that the problems that they are facing should be aligned with what we think we should care about? So which means that obviously there are many problems, but out of those problems, how do we choose one problem that we truly care about? And how do we find whether we care about that or not? Because I feel like many of us who are sitting here, especially students, have this problem where teachers ask us to find our passion or to find something that you are really passionate about, but then you can't find it and then you feel very depressed. So do you feel there is any solution that you can offer?
Mehdi, I'm going to
I'll take this one. No, okay, if you don't find anything you are particularly passionate about, you can also do something else. You don't need to be an entrepreneur if you don't feel you really want to. So don't get depressed because you don't have the next big idea, right? You can have an amazing career anyway. That's the first thought. The second thought is why you want to start something you're passionate about is mainly because being an entrepreneur, it's a difficult journey. Ups and downs, a lot of no's, a lot of sleepless nights and problems. So you want to be doing something that you feel some inspiration, some passion for. Otherwise, it's easy to give up.
To add on that, I feel like in my case, I'm really sure that I want to become an entrepreneur. The only thing is, I'm passionate about 5 different things, and people keep telling me that I have to choose one thing and focus on that. So how do you choose if you have lots of options?
You can test a couple of them, the ones you care more about, 2, 3 of them. You can run pilots and see how easier or more difficult it is vis-a-vis the other ideas, and then you go for sometimes serendipity. Sometimes the universe start telling something, and then you start. That's a conversation could go on for 30 minutes, so maybe, yeah.
Hi, I'm going to add on to Medea's answer there, and I agree with her entirely. But you said something. I'll put this back to you. You said you want to be an entrepreneur. What is that? What is it to be an entrepreneur? That's not a job title. You have to build up real-world experience before you start solving problems. That's the advice I can give you. Being an entrepreneur in itself is nothing. At the end of the day, you might as well say that you're self-employed, building your own business. How to focus on the problem to solve, get out there and get real-world experience, realize what the problem is. Is it indeed a problem? If it's not, you're fighting an uphill battle from day one. You're doomed to lose. And that's okay, because that could be part of your learning experience. But the best thing to do is get out there and get real-world experience. Don't just try to jump into being an entrepreneur. That's nothing. You might as well be a lifeguard or something. That has more definitive meaning than an entrepreneur, which is a very kind of suitcase word, very loose.
I would just add on to that, like work with a startup, you know. You'll get like startups that are working in these 5 different areas you're interested in. Yeah, you will figure out for yourself which one speaks to you the most. And yeah, that's how it is. And I second what he said, being an entrepreneur is not fun. It's a lot of hard work. So you really, really do need to be like in it for the long run if you're going to go for it. Yeah.
Thank
Cool.
you so much.
There's a question there at the back. Yeah. Oh, sorry, you had a question. Sorry.
Yes, thank you so much for the great talk, first of all. And I have a question concerning Ayman's comment about misinformation. I feel like we live in an age where like there are like a lot of gurus, social medias everywhere, and everyone's basically giving us advice. So how do we navigate our way out of that maze, basically? It's like, I really don't know. I mean, people give me like literally opposite advices. So how do we know which information to follow?
I'm going to
Is that
point
to
this
me?
to Ramesh first. Sorry.
That's a very interesting question, but like, you don't. You just listen to all like the advice you can get, and then you make up your mind your own way, and you gain experience over time to know who's giving you the sound advice, who might be conflicted, who might be transparent, who might be lying. Like, it will take you a lot of time to actually know what kind of advice you need to listen to, but you need to listen to everybody for sure, especially at a younger age. And you need to have several ones. Like, just having one mentor giving you one line of advice is not a good thing. So you need to have several people in your life, and like professional coaches or mentors or personal ones who you can actually trust and you can listen to. So there isn't a very clear answer to this as like a yes or no, but you really need to navigate it on your own.
Okay, I just have one more question. I'm really sorry for taking someone else's turn, but it's like, how do we overcome rejection? Like when someone says no, it's like, I mean,
you just take it, you learn from it, and you move on. It's a very easy thing as well. And I think also answering the first question that your colleague asked, I think failure has to be very well accepted by you as well. Like Facebook wasn't Mark Zuckerberg's first idea or first startup, and most probably Facebook won't be it wasn't the first social network to be created, and it won't be the last social network that will be successful. So failure is okay. Failure for you to start again is totally fine, and to try again, that's totally fine as well. So this is something that you also have to keep in mind.
Thank you. Do you had a question? Yeah, go ahead.
Yeah, hi. My name is Sardar Ahmad Durrani. I'm a partner with Osiris Group out of Hong Kong. We do VC and PE both. One of the biggest issues we've been having recently in today's winter is that short of finding very good ideas, we've now started, just because how the world is working, expanding into the Middle East, our Asian portfolio into Middle East. Part of that problem is how do you make your founders grow with you as the portfolio, as their set of country portfolios grows? Most of these founders came from a very a place of their heart more than their head. They found the problem through personal experience, through personal tragedy or whatever it was. But now that is grown to an extent where it's now a multi-country product. And sometimes the founders don't grow as fast as the product grows. How do you as investors help them segregate themselves or graduate themselves to a non-exec chair position, so to speak?
That's a very good question. We'll try to be as short as I can. So there are a few different scenarios. There is a scenario where the founder enters a new market, and again, the MEA region is very fragmented. It's not China or the US, so you need to have founders that are ready to sweat a little bit more than in a unified market, just because every country from Saudi to Nigeria to Egypt to Pakistan requires a little bit more effort to enter and to succeed. And they're very different countries. There are some similarities in some of those, but so one is the market fragmentation challenge to enter the region and grow in the region. That's why a lot of us prefer B2B or B2B2C models. It's just easier and more capital efficient when it comes to growth. When it comes to the personal journey of the founder, that's a tricky one. So some founders are looking at M&A as an option. So when the game is too big for them personally, some are as mature as they should. They see an opportunity to join forces with other founders that eventually they have something they don't have. And we have seen it in our portfolio in a few occasions. That's a great way to continue the growth. Having a smaller pie of a bigger company, why not? or sometimes they need to hire. They need to hire what they are missing, and that's not always easy. But again, if the founder puts the success of the team and the success of the full set of stakeholders before, or in a higher position that is on or her own ego, I think it's always possible. And again, we have seen a lot of our founders having recruited senior experts at a Series B or Series C because that's what they needed for the next phase. And that's what we typically advise our founders to do if they face this challenge.
Thank you so much for that question. Really great question, I have to be honest. I'm running out of time, so I have to bring this discussion to an end. Thank you, Ayman, Ramez, and Medea. And back to you, Natasha.
Thank you, Abby. Give me a round of applause, please, for Abby and our panelists. Thank you, Medea, Ramez, and Ayman.